Hello everyone. In this video, we will be discussing the key concepts of real estate investing and how it can be leveraged to grow your wealth. We'll start with the basics of why buying a home is a solid foundation for wealth building, and then move on to more advanced strategies such as house hacking and the BURRR method. Throughout the video, we will provide real-world examples and use concrete numbers to illustrate these concepts so that you can take actionable steps towards achieving financial success through real estate investing. So, sit back, maybe grab a notebook, and let's get started. First, we'll talk about what are the incentives that the government gives to real estate investors. And also, we'll see why these incentives exist. From tax deductions to tax credits, low down payment loans to grant programs, and even zoning and permitting incentives, the government has a range of options to support real estate investment. Let's see how these can be incredibly advantageous to know and make use of. First, tax deductions. Imagine paying less on your tax bill simply by investing in a home. Sounds too good to be true, right? But it's not. Introducing the mortgage interest deduction, a powerful tool that can help you save thousands of dollars each year on your taxes. Many people have sort of heard about this, but not many people know how much it can really save. Here's how it works. Let's say you just closed on your dream home for $400,000 with a mortgage loan of $300,000 and an interest rate of 6%. In your first year of homeownership, you'll pay interest of $18,000 on your loan. That's $18,000 that you can deduct from your taxable income. So let's say your taxable income is $75,000. By taking advantage of the mortgage interest deduction, you can reduce your taxable income by $18,000, bringing it down to $62,000. And if you're in a 30% tax bracket, this deduction can result in a tax savings of $5,400. Now, you might be thinking, this is too good to be true, but it's not. The mortgage interest deduction is a real benefit that the government provides to encourage homeownership and stimulate the economy. Millions of people use this to lower their taxes by thousands of dollars every year. There's more. Let's take a look at property tax deduction in California. If you own a home in California, you can deduct the property taxes you pay each year. For example, for our $400,000 home above, you can save $4,000 per year, and you can deduct that amount from your taxable income, potentially saving you $1,000 if you're in a 25% tax bracket. That's $1,000 more in your pocket, simply for owning a home in California. For those counting at home, that's $6,400 of actual income saved so far, just by buying a home. Now, let's talk about depreciation deduction. This deduction allows you to deduct a portion of the cost of your property over time. For example, let's say you bought a rental property for $300,000. You can take a depreciation deduction of $300,000, 27.5 years, $10,909 per year. This deduction can significantly reduce your taxable income, making real estate investment even more attractive. Second, there are the tax credits that you can get. Have you heard of the low-income housing tax credit? This tax credit provides $1 for $1 reduction in your tax liability for investing in affordable housing developments. For example, let's say you invest $100,000 in a low-income housing project. You can reduce your tax bill by $100,000, saving you a whopping $25,000 if you're in a 25% tax bracket. That's money in your pocket just for doing good. And third, loan programs. If you can't afford the down payment for your dream home, there are government-backed loan programs to help you out. The Federal Housing Administration and the Veterans Affairs Loan Program offer low down payment options and relaxed credit standards, making homeownership a possibility for more people. For example, with an FHA loan, you can buy a home with as little as 3.5% down instead of the usual 20%. For a $300,000 home, that is a down payment of just $10,500 instead of the $30,000 to $60,000 for a regular loan. And if you're a veteran, you may be eligible for a VA loan with zero down payment. This means you can get into your dream home faster and with less money out of pocket. Now you're wondering, why does the government provide such amazing incentives for real estate investment? Well, there's a reason for that. Real estate investment is more than just a way to build personal wealth. It also plays a crucial role in boosting the economy and improving communities. You see, real estate investment stimulates economic growth. By investing in real estate, individuals and businesses create jobs and stimulate economic activity in the surrounding area. This creates a ripple effect, boosting the local economy and helping it grow. In addition, real estate investment increases tax revenue for the government. As properties appreciate in value and generate rental income, they generate more tax revenue for the government. This in turn can be used to improve local infrastructure and support community programs. So, the government provides these incentives to encourage real estate investment because it benefits everyone. It stimulates economic growth, creates jobs, increases tax revenue, provides affordable housing options, and improves local infrastructure. And that's why the government is so supportive of real estate investment. Now, let's talk about what's the really interesting part of real estate investments. It's a relatively safe way to leverage your money, and you'll know what I mean by that in a moment. Investing in real estate offers unique advantages over other investments, especially when it comes to leveraging your money. With real estate, you can use a mortgage to buy a property with as little as 5–10% down, effectively leveraging your investment by 10 to 20 times. This level of leverage is difficult, if not impossible, to find in other investments. But here's the best part. Real estate is a relatively safe investment. Homes are tangible assets with long-term value, making them a stable and secure place to park your money. Let's consider an example. Imagine you have $50,000 to invest. You could put that $50,000 into a savings account earning 1% interest or into stocks with an average return of 7%. But let's see what real estate can do with that same $50,000. You could use it as a down payment on a $250,000 property, leveraging your investment by 5 times. Over the next decade, let's say the property appreciates by 5% annually and you rent it out for a monthly income of $1,500. That's a total of $180,000 in equity and $180,000 in rental income. Now, compare that to $50,000 in savings earning 1% interest, which would become $55,000 after a decade, and $50,000 invested in stocks earning 7% over the same period would become $86,500. The clear winner. Real estate with a total of $360,000. See how investing in real estate provides both leverage and safety, making it a smart choice for building long-term wealth? So far, we have discussed simply buying a home you can afford and the benefits you can get by doing that. This is not all, though. There are some more advanced stuff you can do to level up your real estate investment game. Now, let's see what they are. One of the simplest and safest is house hacking. House hacking refers to buying a multi-unit property and living in one unit while renting out the others, offsetting your housing expenses with rental income. For example, if you buy a duplex for $400,000 with a $50,000 down payment and live in one unit, you can rent out the other unit for $1,200 a month. This reduces your monthly housing expenses to $1,000, and you earn $200 in passive income each month. Or it could be as simple as buying a home and renting out a room in it, which can sometimes pay most of your mortgage and, more interestingly, cheaper than renting the same place. Some other similar investment strategies include live and flip, which is buying a fixer-upper, living in it while renovating, then selling for a profit. Rent to own, buying a property, renting it out while building equity, then eventually occupying it as a primary residence. Vacation rentals, purchasing a property specifically for use as a vacation rental, earning income from travelers. Commercial property with a residential unit, buying a commercial property with a residential unit, using rental income from the commercial space to offset expenses on the residential unit. All variations of the house hacking approach. Basically ways to get in on some real estate while you're building up your capital to level up. Speaking of leveling up, next level step up is the BURRR method. What is that, you say? The BURRR method, or buy, rehab, rent, refinance, repeat, is a clever and highly effective real estate investment strategy. Let's say you have $100,000 saved up and you want to put it to work building wealth. Here's how the BURRR method could play out. Cycle 1. Buy. You use your $100,000 to purchase a run-down property for $150,000. Rehab. You spend $30,000 fixing up the property to make it rent. You rent out the property for $1,800 per month. Refinance. You refinance the property and pull out $30,000 in cash, leaving you with $120,000 in equity. Cycle 2. Repeat. You repeat the process using the $30,000 in cash to purchase another property. Rehab. You spend $20,000 fixing up the second property. Rent. You rent out the property for $1,500 per month. Refinance. You refinance the property and pull out $20,000 in cash. Now you have two properties generating a combined monthly rent of $3,300 and $40,000 in cash to start the process all over again. With each cycle, you're building wealth and creating passive income streams, all while using leverage to maximize your return on investment. This is just one example of how the BURRR method can work, but the possibilities are endless. The key is to find undervalued properties, rehab them to add value, and refinance to pull out equity and repeat the process. It's a smart and effective way to build wealth through real estate investment. In conclusion, investing in real estate is one of the most powerful ways to build wealth over time. Whether you start with the simple strategy of purchasing your first home or dive into more advanced tactics like house hacking and the BURRR method, the key is to take action. Make a plan, do your research, and start building your real estate portfolio today. Remember, it's never too early or too late to start, and the rewards of smart real estate investments can pay off for a lifetime. Thank you for watching, and we hope you found this video informative and inspiring. Stay tuned for more financial and investment tips in the future. Please subscribe to the channel and give this video a like to show your appreciation. The algorithm loves it, and you know what? So do we. Thank you.